This analysis lays out a really bullish case for BigBearAI's acquisition of Ask Sage, framing it as a major pivot into high-margin AI software for the DoD.
It does, and the report nails the financial rationale, the efficient use of that huge cash pile and the synergy potential with all those users.
100,000 users, yeah. But let's dig in, because to make this thesis bulletproof, we have to tackle how BBAI actually pulls off such a massive shift. So, while the report effectively highlights the potential for margin expansion, strengthening the analysis requires a more direct look at the organizational risks of turning a service-heavy contractor into a software powerhouse.
Right.
The ambition is clear. It correctly flags Ask Sage as, a high-margin SaaS platform. We're talking 70 to 90% gross margin potential.
Which is a world away from BBAI's traditional business.
Exactly. But the report's conclusion seems to lean pretty heavily on this transformation just happening.
It treats the jump from low-margin services to high-margin software like it's a solved problem.
It does. Not like a transition that needs to be rigorously managed. It feels like we're just assuming a classic defense contractor can suddenly start acting like a high-speed SaaS company overnight.
With zero friction.
Right. Defense contracting runs on these long, methodical, multi-year cycles. It's all about human capital, documentation.
And Ask Sage's world is the complete opposite. It's rapid iteration, agile product development. That's a huge cultural and operational gap.
And that gap needs to be quantified in the analysis. I mean, how does the report account for the friction when those two speeds collide?
If this is really a game changer for BBA, the analysis needs to introduce those friction points.
Like what?
Well, the culture clash, for one, technical integration overhead, talent retention, and then show exactly how BBA plans to mitigate them.
That deeper analysis adds so much credibility to the bullish forecast. It can't just be about financial synergy.
It has to be execution synergy.
Yes. And with a transformation this big, the market needs to see that management can actually pull it off.
You have to wonder, if BBI's internal structure stays slow and methodical, does it risk suffocating the very innovation it just paid $250 million for?
That's the core question. The report needs to analyze how BBI plans to integrate Ask Sage's fast-moving product cycle into its existing structure. That is absolutely vital for scalability.
So to make this more actionable for the report,
okay.
Instead of just noting the margin potential, why not expand the analysis to explicitly model potential integration costs or timelines that could delay that margin expansion?
Good. Like, what are the sunk costs of retraining legacy BBI teams to sell and support a pure software product?
And let's get specific on customer adoption. You could use a few hypotheticals.
Okay.
Like, what specific mechanisms will ensure existing BBI customers adopt this new platform fast enough to hit that 6x revenue growth rate? That's $25 million in ARR they're projecting.
That revenue is entirely dependent on quick adoption.
It is.
We also need to see the mechanics of the cross-sell. The report mentions pushing BBI's tools like Conductor OS and Veriscan to Ask Sage's user base.
All 100,000 of them.
Yeah, but how? The report needs specific examples, or at least reasoned assumptions, of how that cross-selling is going to be incentivized within BBAI's existing sales structure.
Otherwise, those 100,000 users are just potential, not guaranteed revenue.
It's the difference between saying, this will transform the company, and showing the step-by-step roadmap that proves the transformation is actually executable.
Exactly.
Okay, so let's shift from the organizational side to the financials. The framework is strong, but it needs sharper context. To reinforce the conviction of the prime entry point conclusion, the analysis needs to more aggressively defend that $250 million valuation, especially when you set it against BBAI's recent volatility.
The report's right that BBI is paying a pretty standard 10x forward ARR multiple.
$250 million for $25 million in revenue, growing at 600%. In a vacuum, that ratio looks fine.
But this deal isn't happening in a vacuum.
Not at all.
That valuation is in direct tension with BBAI's reported 20% revenue decline. That's a loss of, $33 million in Q3?
That 20% decline is the exact risk factor the analysis has to wrestle with more directly.
Yeah. The report acknowledges it. It suggests Ask Sage plugs this gap.
But just saying the multiple is standard isn't a strong enough defense when the acquirer's own house is on fire. It doesn't really cement why the valuation is justified despite that deceleration in the core business.
Okay, so maybe we pivot the argument?
How so?
Could the evidence also support that this isn't an opportunistic buy, but a strategic necessity? I mean, if your core business is shrinking by 20%, paying a premium to replace that revenue immediately is a very defensive, stabilizing move.
That's a much stronger frame.
Yeah, the report should focus less on the standard nature of the 10x multiple and more on why Ask Sage specifically deserves this premium relative to BBAI's own challenges.
So you have to demonstrate how that 25 million in ARR from Ask Sage is inherently more valuable or more stable than the revenue it's replacing.
You got it. That's what mitigates the risk from the Q3 decline. You have to prove this isn't just buying growth, it's buying quality growth that actually de-risks the whole company.
And that requires some concrete metrics on revenue quality.
Right. Let's see a comparative analysis. How does that 25 million in ARR differ in contract length, renewal certainty, compared to BBI's legacy revenue?
If Ask Sage has government contracts with much longer durations or higher renewal rates, that's your objective justification for the price tag right there.
Absolutely. Or you could frame the price as a strategic necessity that instantly changes BBI's entire trajectory.
The analysis does argue that the acquisition immediately flips the growth picture from negative 20% to the new guidance of 125 to 140 million.
That's a massive inflection point.
It is.
So you can argue that the multiple is actually a cheap way to buy immediate, irreversible momentum.
It totally shifts the debate from did they overpay to they paid the necessary price for survival and a re-rating. And for the investor looking for that prime entry point, you have to connect this defense to what's happening in the market right now. Explicitly link the stock consolidating around 680 to the certainty of the deal closing in late Q4 or early Q1. It makes the valuation defense much sharper, more immediate.
It connects the financial metric to the actual trading thesis.
Exactly. So the financial piece is really about changing the narrative from Burma Dubey paid overpaid for growth to Burma Dubey paid a justifiable premium for stability and quality revenue.
Right, okay, that makes sense.
So finally, let's look at the third pillar of the argument, the competitive moat. The report calls it Ask Sage's secret weapon. The report identifies Ask Sage's security status as its secret weapon. But to support the game-changer thesis, it needs to build a much more enduring narrative around this secure ChatGPT moat.
Okay, so the material identifies its function, right? Securely ingesting data, connecting to APIs, using things like GPT-4, Claude, Gemini.
All inside classified government environments.
Right. But here's the phrase that introduces a huge potential vulnerability. The report cites its FedRAMP high accreditation considerations as the key advantage.
Considerations. That one word is a major risk factor.
It is. It means they don't have that final critical stamp of approval yet.
And while supporting 100,000 government users is very impressive, framing the entire competitive advantage around a status that is only under consideration just assumes the moat is strong enough.
It completely fails to examine what stops a better-funded competitor, a Microsoft or an Amazon Defense Division, from getting a similar accreditation.
Or just bypassing the security barrier entirely in the near future.
That's the key. If the main value prop is security and compliance, the analysis has to shift focus from the current status to the durability of that advantage.
We need to know what makes this moat exclusive, not just compliant and waiting. Is it a technical barrier or just an administrative one?
Exactly. If this is truly the game changer, the report has to make the case that Ask Sage has proprietary tech or deep institutional relationships or some critical first-mover advantage that makes it prohibitively costly or time-consuming for anyone else to replicate.
That means getting more granular about the infrastructure.
Yes, we need to articulate the specific barriers to entry that go beyond just the compliance paperwork. For instance, is the real moat the sheer complexity of supporting 16,000 different government teams at the same time?
Which is a massive logistical challenge.
One that competitors haven't solved.
Or maybe it's the established mission-critical data pipelines they have into places like Space Force and the Defense Health Agency.
Those are sticky, high-value relationships, incredibly hard to dislodge.
And this is where BBAI's own legacy assets become so important.
How so?
The analysis should detail how BBAI plans to use its deep DoD relationships to accelerate converting Ask Sage's user base into long-term, contracted revenue.
So that's what turns the 100,000 users from a vanity metric into a truly defensible ecosystem.
Precisely. And finally, the analysis has to address the competition head-on.
It should include an analysis of the counterarguments.
Yes. What other AI platforms are serving the DoD right now? And how does Ask Sage's offering definitively beat them on security, on scalability, on integration? That comparison is the ultimate proof.
Without establishing why the security advantage is unique and hard to copy, The report just leaves itself open to the argument that Ask Sage is first to market with a feature set that will eventually become a commodity.
Okay, we've covered a lot of ground here, from organizational structure all the way down to the software's moat, but these are the big picture items. So to summarize, we focused on 3 core areas.
Okay.
First, inject some realistic friction. Transform the narrative around organizational change by explicitly addressing the huge integration risks of merging 2 totally different business models.
Second, we need to deepen the justification for that 10x valuation multiple. Link it directly to BBAI's financial weaknesses and frame the acquisition as a necessary corrective action that buys high-quality revenue.
And finally, strengthen that competitive moat analysis. Prove the durability and exclusivity of the secure ChatGPT status beyond just the current certifications. Show the entrenched infrastructure and relationships.
Right. Implementing these suggestions will move the analysis from just a compelling bullish piece to a really robust, fully contextualized investment thesis, one that can stand up to serious critical scrutiny.
Exactly. Challenge yourself to integrate these suggestions, and we look forward to